Sam, today we're going to talk about one big challenge a lot of property investors face, which is the challenge of diminishing asset values. Yes, diminishing property values. It does happen, and there is some science behind how it works. So I'm going to talk you through some of the logic so you guys can understand really why growth properties obviously are generally the consensus around them is very, very strong. So today we're going to talk about something which I love explaining to property investors, as it's a little bit of a misunderstanding for many people. And I see really some of the challenges around not understanding this later in retirement years. It can really throw people into a poor little position when it comes to property investment. So today we're going to talk about something which I refer to as the rental gap. Yes, the rental gap. How does the rental gap actually work? Well, generally with real estate, if it's going to be high growth, it's basically the consensus of the asset from the market is strong. People believe in the property, more people want to buy the property, so growth occurs. But growth generally doesn't necessarily also see growth in rental returns. So this is why some of the best properties today are yielding 1%, 2%, 3% rental return. The consensus is the growth on the asset is just so good, it's going to separate from the return on the asset. It's a gap, if you like, but it's actually one would argue a very, very, very good gap, because the reality is the asset is strong, it's growing, and it's doing its thing. The opposite, if you like, is a high growing property, high rental growth or rental return property, which is actually not growing in rents. It's just simply declining in value. And in real estate, we often call this disinvestment. So in other words, the property over the time or age of the property has declined in value, which basically makes the rental return artificially look very, very strong. And a lot of property investors end up buying a property where there is a huge gap, if you like, of making that property actually grow. So they buy a property which is basically, ever since it's been created, gone down continuously in value, but the rents have stayed the same. Because it's gone down in value, the rents on paper look very, very strong. The polar opposite to a growth property, where the consensus is very, very strong with the asset, and therefore it grows, and then all of a sudden when you're looking at it, it might have a very low return. That's not necessarily a bad thing. Obviously the conversation is, will it get more growth? Potentially it will. And today, if you look at the best assets in Alpha Sydney, like Alpha Sydney, which is now a lifestyle market. It could be, for example, Monaco at the moment, certain pockets of Sydney, it's that expensive. There is no rental return. There is no yield. But the growth goes up in millions. And so it is the consensus of the asset very strong. When we look here, the consensus is the asset is not worth anything, so it's going to diminish, and that is fundamentally going to create a return. It's not that rents are going up, it's that the asset is diminishing in value. So then that leads us to the idea of the rental gap, which is basically the idea that time and age will get the better of a property asset, a dwelling. And so along the way, if you like, there is this gap, which is here. And what happens when a property goes into disinvestment, it basically ends up in a place where to reinvest in the asset is going to cost hundreds of thousands of dollars. It may not even be possible. It may be better off knocking down and spending hundreds of thousands of dollars to bring the asset to life. And a lot of property investors end up in this place because they buy something, for example, that, I don't know, was built in 1975. Today it's 46 years old. They plan to retire in 25 years. In 25 years, on their way to retirement, the asset then becomes a 71-year-old asset. And as such, it goes through this period of disinvestment. It just gets worse and worse. The condition gets worse. Now, there's this misnomer in real estate that you just renovate and everything gets fixed. And it doesn't necessarily work like that, because when a property falls into disinvestment, it could cost literally hundreds of thousands of dollars to bring it back to life. But because of that cost, the rental return may only be an extra $40 per week or something along those lines. What happens is there's this problem with property investments where the cost to actually fix the asset is not practical. You can't actually add value to the asset. You can't, spending $100,000 to get $40 a week in rent is just not. It's a waste of money, right? And so for many property investors, what happens is their asset goes this way and it ends up in a place of disinvestment. And of course, for many assets in disinvestment, all of a sudden, what happens is if you get multiple assets, or where the landlord is not fixing the assets, not making them better, just, they are falling behind, all of a sudden you find basically inequality. All of a sudden you've got, let's call it for all intensive purposes, slum properties. And the only good thing for slum properties is being bulldozed. But the reality is most property investors, end up with a bit of a ticking time bomb. And this is where, again, this happens. So another investor will come in and go, wow, the yield's like 8 and 7%. But it's actually all that's happened is they've buying something which is just not going to perform. Hey, Alison, my brother's got a house in Brunswick, can't rent it out, needs massive repairs, foundation, heritage. Exactly. So what happens is the cost to actually fix the asset is disproportionate to the result, right? So in your brother's situation, and for a lot of people, they do nothing. So they basically don't know what to do with it. There's only two ways out: sell it, usually, for less, or, just let it rot. And of course, the worst thing is, particularly in bad socioeconomic suburbs or lower socioeconomic suburbs, if you mix disinvestment of assets and disinvestment of a neighborhood, you basically end up with a fairly rotten piece of property, bad tenants, or all of that kind of concept, right? So back to, I guess, the solution is, what I focus on is more modern properties. And as they enter the rental gap, the curve, if you like, is just a lot less, because, a property which maybe is newer today, or 5 years old or 10 years old, when it falls into the rental gap, it's a rejuvenation of the asset. It's not a complete structural challenge. It's not major renovations. It's more of like a coat of paint, new carpet, better blinds, better lighting. Maybe you remodernize the kitchen, put some better stoves in. So maybe you're spending 40 odd $1,000 or something along those lines. But guess what? You're going to get 40 or $50 a week in rent to justify spending the money. You may get even $100 a week in rent to spending the money. Why? Because the asset is not falling into disinvestment. It is just simply going through a normal process of time and age hitting the asset while there is newer assets being produced that the market wants. And of course, when it comes to what retirement might look like, the idea of understanding time and age, and of course this loss of yield is incredibly important, and loss of I guess appeal of an asset. And that is why we want to start with more modern, and we want to end up in retirement with a modern asset. And I see this a lot. I mean, I'm sort of having a few coaching things at the moment, and when I look at people's portfolio who are going into a period of time where they're not working, it's the disinvestment properties which are their risk. It's who wants to go into retirement carrying liabilities. Now, real estate can become a liability, or it can become a asset. And it's this kind of journey which you need to decide on. I think the easiest way to navigate the idea of the rental gap or disinvestment is just to start with something half decent in the beginning, an alpha property, which will obviously for 50 years, 60 years, still be a property where you do not need to do massive capital input to keep it going. And in particular, probably the worst place you can end up as an investor is buying a disinvested property in a neighborhood which is basically full of disinvestment. In other words, other landlords who are not spending a cent to bring their assets to life. When landlords do not have the ability to upgrade their properties, fundamentally you end up in a low socioeconomic zone of real estate. And of course, all they're good for is really not much at all, right? And so what we want to do, if we do have assets going sort of certainly down in appeal, is know that our neighbors are upgrading, they're renovating, they're knockdowning, they're rebuilding. And you're obviously, if you go through many good pockets of Australia right now, in our cities, a lot of the nice suburbs, there's this new effect of rejuvenation occurring, gentrification, if you like. So just a little lesson there, because I've been noticing a lot with people's portfolios when they come and see me, and they're sort of going through this kind of period where they're going into preservation. And we talked about this a little bit last night with Andy. He's got a slide where it's like, we want assets in protection, accumulation, and then preservation, because basically what happens, we might be working when we're accumulating assets, and if we make some good protective decisions when we're buying assets, when we're trying to preserve assets, when we don't have a job, if we avoid the rental gap theory, we're actually going to end up in a place where we've got income in retirement. And it's just something you got to be very, very diligent about. I think the culture of real estate is a bit wrong with the rental gap problem. I think particularly with where the economy's headed, with the split of the middle class, that you are going to see more landlords being unable to upgrade their assets, and where those assets are going to be some place where I'm going to avoid, because you will end up with basically slums being created today in real estate. So obviously, to avoid it, just stick to something a little bit more modern, easy to upgrade as your property loses appeal. And of course, you can reestablish appeal to the asset. Anyway, that's it. Hopefully that was interesting. So my drawing is terrible, but I go on. Hey, thanks for your time. Thanks, Alison, for being there again. I can't believe you're always around. You're amazing. So we're going to get you on the podcast. It's happening. We're going to do it today. All right.